I am going to be talking about a home equity conversion mortgage. That's a mouthful. So we also call it HECM. And so if you use the word HECM, you're going to be in the know. So today I'm going to give you information. And HECMs, by the way, are more commonly known as reverse mortgages. So today I'm going to talk to you about a number of different things, talk about some of the myths of reverse mortgages, give you enough information to make you dangerous, example of how I've helped clients stay in their home or even purchase a home using a HECM for purchase, or H for P. And along the way, I'll give you tools that if you need them. And you don't need to be the expert. So I'm going to overshare, but you don't need to be the expert. I'm just going to give you tools, and you can always call me with questions. Okay, so the next slide. There it is. About me. So I actually have a website. You can get to it a number of different ways, but it's AlamedaReverseMortgage.com or CherylMcCarthy.com. And so originally I'm from New York, New Jersey, and I landed here in 1980, and here being Alameda, and I haven't left since. From a large family, so I got a bunch of them out here. So now there's 5 of us in California. I love Alameda because it's a small town, it's close to everything, and it doesn't have that small town feel overall. I've been in banking for a long time. I started when I was a baby, but 30 plus years in banking and finance and major banks. And then in 2015, I left the major bank to just offer reverse mortgages. I think this is my forever job, not think, I know it is. It's a job where I get to help people every day, and it also pays me, so yay. So on my website, it has a couple of different tools that you could probably see. One is frequently asked questions. This big one here is calculator. So there's calculators for if I'm a client that's over 62 and interested in a reverse mortgage, I just put in my information and it pops out a number. There's also a calculator for financial advisors or for customers interested in integrating their reverse mortgage into their financial planning. And also one for purchases. So first I'm gonna go over the myths. And if I'm moving too fast, just wave at me. No? Okay, good. So, one of the biggest myths is, and this is from days gone by when reverse mortgages first came about. So 1988, it became a federally insured loan, and there are all kinds of protections put in place. So the lender is not on title. The lender does not own the home. Just like any other loan, they put a lien on your house, but it's your home. The funds from a reverse mortgage are not taxed because it's not income. It's actually debt. Reverse mortgages are risky and the funds are not guaranteed. This is absolutely incorrect. Reverse mortgages are guaranteed by the Federal Housing Authority and insured by them, and they are not risky. There's been, like I said, a lot of protections put in place. The borrower can never end up owing more than the house is worth. Doesn't matter how long they've lived, how much money they've used. It's called a non-recourse loan. The myth number 5 is that when the buyer or the homeowner dies, the lender either takes the home or sells the home, and there is no inheritance. And that's incorrect. The heirs get to sell the home, pay off the loan, do whatever they want. Whatever equity is in the home is theirs. And no matter how long you live, you get to use the reverse mortgage and stay in your home and never make a mortgage payment. And I'm sorry I didn't bring this up sooner. This is why everybody loves reverse mortgages. You never have to make a mortgage payment as long as you live in the home. And myth number 7 is you can never get out of a reverse mortgage once you've done it. Well, that's not true. So I am routinely doing refinances of reverse mortgages. I've helped customers sell their home and buy another home. So it is not forever. Does that make sense? Yes. Okay. So here it is, a home equity conversion mortgage, H for P. special features. It's a home equity loan with special features. It's on your primary residence only. You don't have to make a mortgage payment. You have to be 62 and older. And this is key. The lender cannot cancel, freeze, or reduce it. So when we've gone through the Great Recession in 2008, 2011, lenders were routinely freezing lines of credit, reducing the lines of credit so people couldn't access their equity in their home. This loan, it doesn't matter what the value of your house is, as long as you maintain property taxes and insurance and live in the home, you get to use it. The loan becomes due when you sell the house, when you move out permanently, or you're 150 years old, whichever comes first. Okay?
That's funny.
Yeah. I won't be here, but go ahead. So when you die or pass away, so if you move out permanently, what that means is if you decide that you're going to go live in assisted living and have somebody else cook all your meals for you and that kind of stuff, that's terrific. But the reverse mortgage has to be paid off. It's only for your primary residence. It is part of the government's programs to allow seniors to age in place. They have first-time home buyers, they have veterans loan. This is the third leg of that stool. If you sell the home, when the home gets sold, the reverse mortgage gets paid off. This property taxes or insurance, that's the only way you can default on a reverse mortgage, is if you don't maintain your property taxes and insurance. And that's because they would put a lien on the property and it would kick our lien off. So when you pass away, your heirs can do a number of things. They have 4 options. They can sell the home, they can keep the home, and they would refinance and have to pay off the reverse mortgage. Or they would pay, if the house was worth less than the loan, they would pay 95% of the appraised value at the time of death. Or they can just say, hey, lender, here you go. Here are the keys, and away they go. So this is the fun part. How I've helped people in the past. So I just got a phone call from a borrower that very affected by COVID, self-employed, income reduced tremendously during this time. So what we're in the process of doing is paying off their existing mortgage and freeing up. This person had about $3,000 a month in a monthly mortgage payment, and eliminating that mortgage and replacing it with the HECM. So they don't have that $3,000 a month going out anymore. I also just helped somebody that their monthly mortgage payment was only $850, but the same thing. I was able to eliminate their mortgage payment, and now she has an $850 coming into her that she didn't have before. I've also saved a couple of customers from foreclosure, where the county or the city was putting tax liens on their houses for back property taxes. And one, I got it refinanced and done when they were 2 days away from foreclosure. We worked on it for a while. I've done a lot of remodel and repair. So I have a couple of customers where husband was put into skilled nursing, after a major illness. And for a short period of time, we needed to send a lot of money in order to fund his stay there. But then we also had to remodel the house so that when he came home, there was wheelchair access, double things. And this is before I knew, Alyssa and everybody else, but we were able to do that for them. This line of credit, I'm going to talk about a little bit more, but this line of credit that can come, so stop there. So you can access a reverse mortgage in a number of different ways. You can get a bunch of money, a lump sum up front, and that's it. You can get what's called lifetime payments or tenure. You can get a line of credit, and this line of credit acts like a home equity line of credit, but with some great, great features. You never have to make a payment. The unused portion actually grows over time, so you're able to access more of the home's equity. And you can use it no matter what happens in the housing market. It can never be frozen or canceled. So right now, banks are not accepting new home equity applications. So if you have customers that are in their house, 3 to 4 major banks have said, we're not accepting any more home equity applications. They are also not allowing refinances with cash out. So this is a viable option for some of your other customers. Incorporating a reverse mortgage into housing wealth, into a retirement plan. And we were talking about it a little earlier, when the stock market dipped crazily, went down to record lows. If you had to take money out of the stock market because you're in retirement and you needed that monthly income, you would have locked in your loss and would not have been able to rebound when the market rebounded. If, however, you had a line of credit with your reverse mortgage, you could have pulled from that, giving your stock portfolio a chance to recover. Supplement income. I just got a phone call yesterday from a client that has a house. She owes very little on it, but she only gets $900 a month from Social Security. And she has about $500,000 in equity. So what we're going to do is convert it and give her a portion of that on a monthly basis. And then she'll also have the line of credit for emergencies. Some people have used the reverse mortgage to help their kids buy their own house, get a down payment, that kind of thing. I'm seeing more and more often that my customers have been declined by a bank. We don't look at debt to income. We don't look at FICO scores. We look at, after we give you a reverse mortgage, we're going to be able to maintain the property taxes and insurance and have enough money to turn on the lights. So great for an emergency fund, great for reducing the burden of healthcare costs, or to fund the expense of in-home care. And you have the cash available for a large expense, such as a roof or whatever, to pay your property taxes. Even I've had one customer that inherited a home with a reverse mortgage, and she was over 62, so I was able to give her her own reverse mortgage. Or you can use it to do what? Buy a home. So, you can use it, the reverse mortgage, to buy a home, right size, downsize. Divorce is a huge issue nowadays. Divorce in people over the age of 50 has increased 4 times in the last 10 years. So it's a huge number of people that probably look at each other and say, I'm not spending the rest of my life with you. So baby boomers who are retiring at an insane amount every year, there are 52 million baby boomers that own their home. And the reason why they move is to access some of that equity in their home, where if they just stay put, they could do HECM and then access some of that equity. Also, the house is too big, they have a change in health status, all that other good stuff. So here's how it works for purchase, and then I'll slow down and let everybody ask me questions. And this is in the calculator, and I also have a nice little book for you. And let me go to the previous screen. So H for P, because now you're also knowledgeable, is that's HECM, Home Equity Conversion Mortgage for Purchase, or H for P, is a one-time down payment, and you don't have to make a mortgage payment. So, for example, I just helped a customer sell his big house that was a duplex. I didn't help him sell it, his realtor did. And then when he got cash proceeds from that, he was able to buy his forever home. He put a large down payment and doesn't have to make a mortgage payment and kept some money in the bank. So in that example, his new home cost, let's say, $500,000, and he was 70 years old. So he had to put, oops, come back there. He had to put down $240,000. And the great thing is he had $200,000 left in the bank, and he's not making a mortgage payment on that. So there, I'm going to stop.